The stock market and forex market can be very tricky, especially if you're trading it, and even if you're buying to hold for a long term. That in itself can create a lot of uncertainty because you don't know where the market is going. I'm going to show you guys one strategy using one indicator. I'm going to explain what the indicator does, why it's there. I'm going to show you guys how you can use this indicator to get you an 80+% success rate. So make sure you guys watch to the end because you do not want to miss any information. If you're new to this channel, welcome. And seeing as you've gotten this far, you may as well hit that subscribe button and that notification bell so you don't miss any further content, because I'll be putting out content weekly, and this will be about anything personal finance and wealth generation. So from the stock market to the forex market, properties, all of that, even about loans, credit scores, all of that. So you do not want to miss any content on this channel. So let's get into it. So before we get into the chart, the strategy and the indicator that I'm going to show you guys is the RSI. So stands for the Relative Strength Index. The Relative Strength Index, RSI, developed by J. Wilder, is a momentum oscillator that measures the speed and change of price movements. The RSI oscillates between 0 to 100. Traditionally, the RSI is considered overbought when above 70 and oversold when below 30. Signals can be generated by looking at divergences and failure swings. RSI can also be used to identify the general trend. So in a nutshell, let's pull up the RSI on TradingView, go to indicators, then RSI. So it's the first one. Whenever the RSI indicator shows over 70, a value over 70, this generally means that the market is overbought. So what you can start expecting or generally expect from this is that the bulls are potentially going to start losing steam and the bears are going to step in. Bulls being the buyers, bears being the sellers. And by the bears stepping in, there's going to be, or likely going to be, a lot of selling pressure, which will bring the price of the asset down. And as you can see here, the minute the RSI got to above 70 in this point, you can see that the bulls started losing steam. Basically, in this upswing, the bulls started losing steam. And then the bears basically created a resistance, stepped in with a vengeance and brought the price way down. The reverse could happen when the price gets to, or the RSI gets below 30. What you can start to expect is that, generally speaking, the bears start to lose steam and the bulls may step in. You know, this effectively is a self-fulfilling prophecy. It doesn't work all the time, of course. Nothing is 100%, but a lot of the times it does work. But I'm going to show you a way that you can use the RSI that you can effectively use as a one-stop shop indicator that can eliminate a lot of false signals and give you a much higher success rate and accuracy. Well, what's the secret technique you can use the RSI to get you a high success rate? Well, that's something called RSI divergence. So basically, RSI divergence is when the price makes a new high but the RSI doesn't, or the price makes a new low but the RSI doesn't. Bearing in mind that the RSI basically calculates and shows the momentum of the price action. So in saying that, when the price makes a new high, you would expect the RSI to actually make a new high, because you'd expect that the momentum, the bullish momentum, has picked up for it to drive the price even further up to break a resistance. But if the RSI doesn't, then this shows that potentially the bulls have lost steam and that new high that is made is actually a false breakout. I'll do videos on breakout strategies, all of that. But looking at an example of this, we're looking at the Euro AUD on the 1 hour chart. So the price came down, made a new high, and even though the price made a new high, the RSI didn't, because the RSI effectively went from 80.41 to 73.04. So this shows RSI divergence. And what you can expect when you see this is that it's a very high chance that the price is going to start coming down because the bulls have lost momentum. And this breakout was effectively a false breakout, which means that the bears are going to come heavy on this. And the minute that you start seeing red candles, or the minute the bulls start seeing red candles, they're just going to pull out the market. This has been an example. It took a little while for it to happen, but look, the price effectively kept trying to come back up to push above that resistance, the resistance at 1.56865, but they couldn't manage, the bulls couldn't manage to keep the pressure on the bears to keep the price high, and the bears won that fight and effectively brought the price all the way down to test the low. I know this is technically heavy, so if you don't understand it, let me know in the comments below and I'll be happy to explain any part of this or even do another video. But yeah, this would have been a good time to get in on the market. As you can see, if you had gotten in here on this candle, at the top of this candle, you would have effectively gained, assuming you set a stop loss that was above, this, basically the high of this market, and then you brought your take profit all the way down to this point, you would have got a 5-to-1 return, basically 5-to-1 reward to risk ratio. That's a very, very nice trade. The RSI is widely used as an indicator, so this shows why it's potentially a good self-fulfilling prophecy. So every time you see this, a lot of other traders, a lot of investment, venture capitalists, hedge funds, all of that, they all see the same data. And if everyone's thinking the same, then there's a high chance that everyone's going to act in a certain way. There'll be that one or two that act in different ways, but fundamentally, this is why the RSI works pretty well, especially if you use RSI divergence. There you have it, guys. One simple strategy that you can use to dominate the stock and Forex markets. Go ahead, backtest the strategy, gain some confidence on how you can use it and how you can fit it around your trading style, and I guarantee you get more than 80% success rate. So if you enjoyed this video and this is the kind of content that you like to see, go ahead and subscribe, and of course hit that notification bell so you don't miss any further content. Comment below, let me know your thoughts on the video, let me know your thoughts on the strategy. Have you tried using it? Are you going to use it? Let me know in the comments below, and also give this video a thumbs up and share the video, get it out to like-minded guys like yourself. Peace.